when you're talking, it makes me think about, I think the way a lot of people understand inflation sometimes, what you might learn in school is it's too many dollars chasing too few goods, right? And so the price of things rise. How much of a role does what's going on in these markets, in these funding and treasury and cash markets play in inflation? Is that a big factor?
It's possible for the repo markets to be connected to inflation. If you had really large amounts of lending that were happening and that's being converted into spending power, I think it's possible for the repo markets to contribute to inflation. But I tend to think of inflation as more being related to the growth in the economy and expectations around wages.
Because I think some people do hear this and they think, well, that's why I buy gold or Bitcoin, is because everything you're describing, I want out. I don't want to worry about, some decision being made at the Federal Reserve and what it means for the amount of money sloshing around. Do you think that there's a logic to that, or do you think that that's a kind of misunderstanding of sort of what actually drives prices to be higher over time?
I think that if the Fed is operating effectively, then this is something that people don't have to worry about because there's enough liquidity in the banking system that it operates effectively each and every day, so that you're borrowing or you're lending at the rates that are, the economy needs to grow and to maintain stable inflation, stable prices over time. And so this should really be in the background. The reason why it's in the foreground today is because of the experience of having gone through COVID, having the Fed bought so many assets. Now it's bringing them back down, and you're at this inflection point about what the level of liquidity should be in the system. Banks, corporations, pensions, insurance companies, they're all active in repo markets because you need to be able to borrow and lend on an overnight basis. That's very, normal activity within financial markets. And it's something that's actually one of the best things about our U.S. capital markets is that we have a large and stable capital market system, and the repo markets are a big part of that. So what you really want there is stability, you want efficiency, and you want enough liquidity that the system operates effectively. And if you've got that, then it's a boon to the U.S. economy.